Welcome back to Explain the Charts, everyone. Today, July 30th, 2025, we're dissecting Alphabet, ticker Google, focusing on the powerful interplay between its latest news and what the charts are telling us. The most significant news driving Google right now is Google's bold commitment to AI, with plans to raise its 2025 capital expenditure target to a staggering $85 billion, primarily for AI servers and data centers. This signals a massive AI spending wave that could benefit not just Google, but the broader tech ecosystem, including cloud providers like Amazon Web Services. However, the immediate focus is on Alphabet's second quarter earnings, set to be released after the bell this Wednesday. Analysts are keenly watching for revenue figures around $93.94 billion. Let's turn to the one-day chart to put GOOGL's recent performance into perspective. Looking across the past year, we see a clear upward bias, despite periods of intense volatility. Notice the significant rally towards the end of 2024, pushing the stock close to the $200 mark, and then an all-time high of $207.05 in early February 2025. Now, observe the sharp pullback that followed the February high and another significant drop in early May 2025. This aligns perfectly with some of the Google search snippets discussing selling off around that time, demonstrating how external news can rapidly influence price action. Specifically, the candle on May 7, 2025, shows a massive drop from 164.08 to 151.38 on extremely high volume of over 127 million. Indicating strong selling pressure, likely fueled by negative sentiment or an event not explicitly detailed here. However, Google has since staged an impressive recovery from those lows, showing resilience and reinforcing the long-term bullish outlook for AI-driven growth. Zooming into the latest action on the daily chart, Google is currently trading at 195.75 as of July 29, 2025. This level is critical, as it puts us right at the doorstep of previous resistance zones established in late 2024, around the $195 to $200 range. A decisive break above 200 would target the all-time high of 207, signaling strong bullish momentum. Conversely, this 195 to 200 area could act as a stiff resistance, potentially leading to a pullback. Let's switch to the 15-minute chart for a closer look at the very recent intraday movements, specifically the period from July 25th to the close of July 29th. You can see the price dropping on July 25th, but then consolidating and building upward momentum towards the end of the trading day on July 29th. Notice the strong surge during the afternoon of July 29th, with an impressive bullish candle around 1325 Universal Time Coordinated, and then sustained buying pushing the price to 195.75 by the 1955 Universal Time Coordinated mark, indicating robust demand going into the earnings report. Now, shifting our focus to the one-hour chart, keep in mind this data covers a slightly earlier period, from July 9th to July 18th, 2025. Even within this narrower time frame, we observe a general ascending trend, establishing short-term support around the $174.50 to $175 level, and initial resistance around $180 to $181. The subsequent price action on the daily chart confirms this upward trajectory continued, eventually reaching current levels. This smaller time frame reinforces the idea of consistent upward pressure, even with minor pullbacks, since the major May 7th correction. So, what are the key reasons to be bullish on Google in the short and long term? The overarching narrative of Google's aggressive AI investment is a strong long-term driver, positioning it for future growth and innovation. Short term, the recent price strength and high volume accumulation, especially visible on the 15-minute chart, suggest positive sentiment heading into earnings. A strong earnings beat, particularly on cloud and AI segments, could easily propel the stock past the $200 psychological barrier. However, there are reasons for caution and potential bearish scenarios. Google is currently approaching significant resistance at $196 to $200, a level that has caused pullbacks in the past. Disappointing earnings, or even just inline results that don't justify the current valuation, could trigger profit-taking and a sharp reversal. Furthermore, major market-wide corrections or adverse macroeconomic news could also put downward pressure on the stock, regardless of its individual performance. In summary, let's recap the important price levels to watch. On the upside, immediate resistance is at $196, followed by the psychological and historical resistance at $200 and the all-time high of $207. Breaking and holding above $207 would be a significant bullish signal for new highs. For support, keep an eye on the $190 to $192 range in the short term, which acted as a base recently. A more substantial support level is around $180, a previous consolidation zone, and below that, the crucial $170 level, which has acted as a pivot multiple times. An unbiased prediction suggests a breakout above $200 is moderately likely, especially if the earnings report provides concrete evidence of robust AI revenue growth and optimistic guidance. This scenario becomes more probable if Q2 results exceed analyst expectations for revenue and, crucially, show strong growth in its cloud and advertising segments driven by AI demand. The likelihood increases with sustained high buying volume accompanying any upward price movement post-earnings. Conversely, if earnings fall short or if there's any negative commentary on the AI strategy's immediate impact, a retracement to the $180 support level is also moderately likely, especially if accompanied by high selling volume. For traders, watching volume carefully for confirmation of breakouts or breakdowns is key, along with the price action immediately after the earnings release.